All right, good evening, guys. Ken at Tortoise Capital. It's the nightly strategy podcast for July 8th, 2020. A volatile day. Had some really strong moves in both directions today. So let's jump right into it and see what we got. So yesterday, Tuesday was like a turnaround Tuesday. It had gapped down, couldn't quite make the 10-day high, and then sold off sharply and closed weakly. Today there was a fractional gap up. There was a fractional gap up. It meandered around, sold off, but then had a strong finish into the close and closed near the top of the day. We noticed that the RL10, 10-period straight line regression, is very steeply up right now. It's going to get better tomorrow because we're going to be leaving off this day. So really, these next 2 days, if there's any kind of gains, that RL30 or the RL10 is going to be very steeply up. And we notice that the moving RL10 has rolled up, down. Yeah, it turned to winter, but still has really powered higher. And today was able to close right at the Z1 river, right at the RL10 fair price, right at the RL90, which is now, we're still on pace with that as the trend. That's been very strong. So that's the trend that we're coming back to, I should say. You can see that during this little last sell-off starting 11 days ago, that was against the trend. Up until that point, it was above the RL90, then sold off down into here, and now it is caught up to the 90 and is tracking it pretty closely. So we'll keep that. We will keep that one in mind. Closed fairly near the 10-day high. It's a little over 1 ATR to the 30-day high, which is also the peak RL10. So in terms of the real strength of the previous move, the highest that it ever got to for the statistically significant peak was 323 and some change. So that's the upside target. And with us being at about 316, it's about $7 to the upside. So that's 2%. That's just a little over 1 ATR of a move. If you get a directional move of 1 ATR and some change, it could get out here, and it would completely cross the Z2, the barrier between Z1 and Z2. There's no real resistance except for, this the RL10 itself, and then the 10-day high, which is in spitting distance. So this blue dot to the upside is within range. The 30-day high and the RL10 peak. The fact that they were able to close strongly and hold some positions in tech overnight speaks well. All we have to see is like one of these 3 days down in here, that kind of a range day, or even this kind of a range day where it opened and moves sharply north. Let's size that up. Yep, that's exactly what's needed to get to the RL10 peak and the 30-day high. A decisive move up. What's in favor of that? Well, the fact that we're in the winter means that there's still room for gains. This fall, then into the winter, but this recovery is now shaping up nicely, so this could get into the spring pretty quick. And not much resistance overhead. To the downside, what do we have? We have low of the day over here at about 313, 312 and a half. The top skin of the dragon here and the RL30 extension, I suppose. The top skin of the dragon is at 312. Bollinger Band mean at 310. Spine of the dragon at about 309.5. Bottom skin of the dragon here, 306.8. So that's really where I think our strong support right here that's got to hold is the Bollinger Band mean and the spine of the dragon. So we have that little bit of buffer to play with. But if it breaks through that, then we really want to see the bottom of the dragon at 306.8, and then the belly of the dragon at 306 even. That's got to hold. Otherwise, it's Z-1 in the PSAR flip. If that fails, then it's down to the RL270 fair value at 300 even. And then the 10-day low at 298.7. And the Z2 line at 298.5. 30-day low all the way back at 295.4. So that's a significant number of support levels that should hold if this trend is going to continue to be strong. So where would we see that if we just extended that? We'd expect that to be the efficient line. That means tomorrow we'd probably want to see a price around, 320. That's where we'd want to see it closing, is right about here. That's kind of our, I'm just going to say 320 would be a significant price level. If it can get above 320 and hold, well, then that would just be excellent, because that would put the once we figure out, let's see, that would be right about here. That would be our target. Yep, that's about where that's about what we want to see tomorrow, about 320 to the upside. And then that would be good. The 10-day range is about 6% from the 10-day high to the 10-day low, and all signs are pointing to yes. So let's keep an eye on that one, and we'll want to see who the winners were today to see if we can gain some more momentum on that. But this is cautiously optimistic. I mean, it would have been better if it could have made a new high, but the fact that it closed strongly is there's still some hope on it. All right, let's find there's our S&P right there. So the S&P comes in at 0.75% net. IWM was just a fraction less at 0.75. Diamonds had a respectable 0.65. So let's see what was better than the S&P. Well, finance at 1.05, discretionary 1.07, tech leaders 107.72 they got to, so that's 1.63%. So a little more than double the S&P was the tech. And then there's some of our tech names: Facebook, Microsoft, Apple, Amazon, all the usual suspects, the guys that you want to see. What else was better? Virgin Galactic, some speculative oil, USO. We're going to see a swing trade, and that one looks pretty interesting. Grind it out. Wheat and precious metals, so maybe that's guys just buying ahead for the next sell-off. They're trying to get it while they can, and they're building those defensive positions. I see a lot of literature on gold getting above 1,800, so that's least surprising behavior there. There's this running gun battle right now between TECL, which is the triple tech sector, so there's a lot of broad names in that one, but it's not just pure tech. There's some tech plays that are benefiting from technology. Whereas TQs are the NASDAQ, and that's really the FANG companies, your Facebooks, Amazons, Netflix, Google, are dominating that. So it's a race to the top between the broad tech sector, 4.5%, and the NASDAQ triple leveraged at 3.8. Yesterday, the NASDAQ won. Today, the broader tech sector won. And then just when we were ready to write this one off for dead, Nikola Motors. We had trouble shorting it yesterday because of borrowing shares, and today they just crushed it with 34%. Hey, Ken, I thought you liked the large caps all the time. Yeah, I do, but I'm open to the possibility of high volume speculative plays in the tech sector. That'd be an example of why. We'll see that trade a little bit later. What was worse than the S&P to the downside? Well, let's see. We have lumber at 0.5. Cisco and Johnson & Johnson continuing to lag at 0.4 and 0.3. Oil exploration at 0.1 to the good. Devon Energy also 0.1. Healthcare flat. Japan and energy both slightly in the red. Real estate minus 0.1. Simon Property minus 0.3. Treasuries started well but then sold off minus 0.4. They're trending still up though. We're going to take a look at them in a second. Mexico minus 0.6. Pfizer minus 0.8, continuing to lag. And now here's our materials sector, and let's take a look at, listen to these names. Alcoa minus 1.25, the sector minus 1.4, U.S. Steel minus 1.7. Walmart couldn't hold the edge, was down 2%. And then Cliff and Nucor Steel down 3 and 3.7% respectively. So no follow through on materials. And now if the S&P starts to lose, then we wouldn't be surprised if XLB was lagging. So plenty of movers on both ends of the spectrum here. And to me, it still seems tech up, and then energy and materials and finance weaker. I'm trying to remember where I saw finance in this. Oh yeah, finance was fractionally better. Okay, so not quite so bad. So energy and materials bad, tech even. I mean, finance even, and then tech large. So if I was going to draw that picture for tomorrow, this is how I'm thinking of it. And then from here, it's this race between TQQQ and TECL. So tomorrow, if the S&P is here and it's going up, then if tech is better, so if tech is better, then I'm just going to choose between one of those two and just pile on. And that way I don't really have to make it a hard decision. I can do something like, let's see. So here's TECL and what they hold. Microsoft is 22%, Apple 20%. You have Intel and NVIDIA on there in fractions. So TECL is kind of a way to just own Microsoft and Apple, kind of pure play. And you have a few other interesting ones in there. NVIDIA is interesting because they are winning the chip battle against Intel. Today they got a larger market capitalization than Intel. So they've moved past Intel into first place as the world's chip leader. PayPal, Salesforce, Cisco, MasterCard, Visa. There are just some people that are enabled by software and technology and financial services. So this is not as pure a play on tech as the TQs are, but it does give you really massive weighting on Microsoft and Apple, kind of the old school tech. It would be worth your while to go check out what are the holdings on the Qs and just see what the different tech exposures get you. So meanwhile, XLF was co-equal today with the S&P, and so that's going to have us looking at JP Morgan and AXP. But you could also just play that with FAS, the triple leveraged finance, or FAZ, the triple leveraged short finance. And then way down here below the S&P today, energy and materials. So this wouldn't surprise us. Actually, oil was actually pretty good today, but the other, Devon Energy was bad. And then Cliff, Nucor, U.S. Steel, all were down big. So if we saw tomorrow the S&P down and then XLB double bad, I'd be looking at this stack, and let me add Alcoa in there. So if the S&P is down and XLB is worse, then I'm just going to scan for those four and see which one is losing the most. That's called finding the mover. And then maybe it's U.S. Steel. So that's the logic chain. You say, oh, market down, sector worse. What's the worst performer in the sector? And then get short that one. And the same thing on energy. If S&P's down and energy's worse, I'm going to come over here and look to see what's worse. And maybe it's, I could put Chevron in there. But also XOP. Now there's some 3x leveraged energy sectors and 3x leveraged material sectors. I have been really concentrating more on the companies than I have the pure play leveraged ETFs, because they're not as liquid as these large cap and mid cap symbols, and they tend to trade very purely. So when they're collapsing, I really like them. Now, by the same token, it would not be impossible to see this scenario. Hey, the S&P is up, but now because they've been beaten down, you got XLE and XLB outperforming. So you could see very easily XLE and XLB now suddenly take a leadership position. Why would that be the case? Well, it would be because people who have a long-term belief about the fair value of those companies might say, hey, here's a chance to buy them on sale. And so you could see a bunch of buying pressure come in on something that underperformed today, but tomorrow that could drive that whole sector to be better than the S&P. So when we're talking about the logic chain and finding the movers, we study the index and those business sectors, and then we branch out from there to find the things that are very volatile so that we can find the thing in the sector that's moving the most. Or in the case of those triple leverage ones, I could just buy if the sector is moving better than the market, then the triple leverage sector is moving better than the market. And FAS, FAZ are fine. You could also extend this little analogy to IWM, the Russell, which can lead you, like Ken Hun likes to do, TNA and TZA, or like I like to do with the Dow. I like UDow and SDow. So there's a way that you can play these sectors directly and not have to worry about the extra complexity of companies. if you just want to go for the market. And why is that a good play? Well, because the market is 50% of the gains, the sector is worth 25% of the gains, and then the company itself is only another 25% of the gains. So if you get the sector and the market right, you're getting 3/4 of the advantage for much less cognitive cost. The extra complexity you get by adding companies makes the cognitive cost raise a little bit. And so to offset that, instead of the extra volatility of the companies, you might just want the extra volatility of those triple leverage sectors. So that's for you to discover which one of those approaches feels better. Okay? So finding the mover and the logic chain. Oops, let's come back to that. Let's see what I want to go with next. So I had a question today. I want to cover that before we get into the daily report. I just want to talk a little bit about this. So I think Dave Rushing, are you in here tonight? No, but Dave asked me the question, and he gave me a symbol to look at, and I forgot what it was. But he asked me, "Hey Ken, what do you think about REITs?" So I have an opinion about REITs, but remember, my opinion about REITs is filtered through my lens. So instead of answering, what do I think about REITs? Real estate investment trust. So that's an ETF. Actually, let me put that. No, a REIT is a holding company that owns properties that pay dividends. And then these guys do their due diligence to find undervalued company or undervalued properties that should be earning a lot of money, and they want to buy those at a discount. And then in the management of that portfolio, collecting rents and all that jazz, then they can pay a very high interest rate. So that's a nice alternative to, owning bonds or treasuries or other income producing instruments, which are all getting beat down because of reasons, So in the search for income, REITs become a very useful tool. So Canada has some that are like petroleum holdings and all that. But so the real estate investment trust is an interesting way to approach the challenge of how do I balance the volatility of capital investments where I'm going for share price improvement and then just get paid a high percentage. So you could try to find companies that pay a good dividend, but then you're exposed to that company risk. So if you wanted to offload some of that risk, you could look at an exchange traded fund that owns a lot of REITs. And so you're getting the benefit of an extra layer of due diligence. And then you're looking for either a residential property holder where they're collecting rents from renters, or you're looking for a commercial property where they're collecting rents from businesses that are trying to buy it. So that's one of the arguments behind Simon Property Group. So Simon Property Group is a company who pays a good dividend, and they're trying to find good commercial properties at a discount. And by good commercial properties, I mean ones that can get filled up with tenants who are going to pay reliable rents. Well, that's problematic in my view in this re-engineering of our economy. So that's put commercial real estate, in my view, at risk, because a lot of that is owned by mid-cap companies who don't have the same kind of financial horsepower as super large caps, and these mid-caps aren't getting the same kind of Fed support to prop up their balance sheets, so it puts them in the squeeze. That, in fact, one of the strategies, if you were a conspiracy theorist, is you might say that, hey, we're going to give a lot of money to the uber large caps, including some of these holding companies, which is coming out in the news. All these asset management people that are getting free money from the Fed. What? If they were shrewd and savvy, they shouldn't need that Fed help. So there's a small problem developing there for them. It's getting some attention. While the people suffer, these guys who are connected are getting free money. Well, the idea there is that those guys are going to use that money to buy financially strapped mid-cap and small-cap companies, and when their little Fed boost runs out and they can't make payroll anymore, then these big guys come in with the free money and repossess, or just buy them outright for pennies on the dollar. So that's going to be one of the ways those real estate investment trusts could become amazing. If some large cap money came in and then started buying these assets, then they could pay a nice dividend if and when the economy starts to rebound. Well, why could that be the case? Well, because the Fed has shifted away from capital price protection to consumer demand, which means they're going to be start pumping money into people's hands so they can spend it in those small and medium-sized businesses. And now maybe these guys can start making some money and paying their rents. So there's some kind of squeeze play potentially going on. So those are some of the things that I think about REITs. And because these are revolutionary times, I'm not so sure that the old school way of thinking about REITs as a reliable way to get good interest payments, but also be exposed to the possibility of capital appreciation through share price improvement. So you were getting a twofer, a chance to increase on the increasing value of real estate, but also to be able to draw some of the income that's coming out of rent and rent collection. So strategically, that's a pretty good idea. So what I thought I would do is say, instead of saying what I think about them, you've heard a little bit of that right there. I've decided to reframe that and say, what I'll tell you about instead is, how do I think about REITs? Because how I think about REITs is more than just what I think about them, but it's what I think about them in the context of other choices that we got to make as a decision maker. Everything's going to come down at the end of the day to that decision. Yes or no. Am I going to buy it? So we don't want to stop with just listing things about REITs, but we want to always serve the decision maker who has to decide what to do. So how do I think about REITs? I think about REITs in the same way that I think about everything else. And these are the basic kinds of models that run through my head as force of habit. So the first thing that I'm going to think about is the frequency of the decision. Now that I'm going to invest some time thinking about REITs, what kind of a decision is that in support of? Is it in support of a strategic decision, an operational decision, or a tactical decision? So this equates to core, swing, and day. So if the little day trade decisions are something like the frequency of the decision equates to a time horizon, how long does that decision have to be good for? Well, as a day trader, it only has to be good for a day, and each day is a new market. On a swing trade, I might be taking a decision every 3 to 10 days. I could end up holding, and nowadays even less. If I made it all on the first day, I might say, you know what, that's enough. But really, I'm looking to make one decision in a 3 to 10 day period. So I'm making multiple decisions as a day trader, where I might only be making one decision as a swing trader. And so over the course of a month or whatever, I might be making 4 decisions over 4 to 5 weeks in a series of, hey, maybe it's up and gets to a point, and then it's going to be down, and then it's sideways, so I'm standing off, and then maybe it goes up. So I could very easily think about REITs as a swing trade in 3 different ways. Hey, here's one because it's sold off. I'm ready to go long. So I think about it as a long swing. And here's one where maybe it's a supported winter crossing. Hey, I'm now thinking about it that it's a good operational short swing. And maybe here's one where I'm just stalking it because it's a sideways quiet channel. So I'm just waiting and bracketing. So I'm actively not trading it, but I'm prepared to trade it. And then maybe it breaks out of the normal range and gives me an abnormal move, and that surprises me. That's finding the mover on a swing trade. So in the operational time frame, what I think about REITs might change 4 times in 4 weeks. It might change 25 times in 25 days at the tactical level. But if I'm excuse me, if I'm thinking strategically, for me, that's probably 1 month at a time and then reevaluate. Now, I'd like to be able to hold that for 3 to 12 months if that thing started outperforming on a relative strength basis. And each month, as I reviewed the bidding, it was still dominating in the ETF2 or the BMR portfolios and was a very good choice. And I would be willing to hold it with the core portfolio for another month. So what I think about REITs in that environment is about once a month, and how long does that decision have to be? So once I add a frequency of decision and a time horizon in there, now suddenly the nature of the question has to change. What I think about them as an opportunity and how they're organized and when they could be useful remains the same, but depending on which of the time frames I'm looking to make a decision in, I could come to very distinct and different possibilities. I could actually be long in the core, might be willing to take a operational swing trade, and I might be playing turbo in both directions intraday. So what do I think about REITs? So it really depends based on that frequency of decision and the time horizon. Well, let me think about it down here now in terms of a market segment. So, real estate investment trust, is a subset of the market, and maybe it's contained inside the larger real estate. I mean, there are things I could do for real estate that were not REITs. So it's a subset of real estate, and that's an alternative asset class compared to, say, bonds and maybe equities over here, and then maybe currencies and commodities. But there's a real strong connection in here between a relationship, you might say, between bonds and real estate investment trusts, because they're both interested in gaining income. So I might look at this whole subset over here about income producers, and then maybe in equities I'm looking at growth opportunities, and maybe currencies I'm looking at swings, and maybe commodities I'm looking at swings and tactical trades on the basis of where we are in the business cycle. So I can divide up market segments into different categories, and then I could consider REITs as one of the choices within this more broad base of income producers. So what is it that I need this investment to do? What am I looking to get out of this? Am I going to buy it because I think it's low priced and the share price could go up? Or do I want to buy it as a source of income to supplement or offset the volatility that maybe comes from these other sectors? So now I can come over here and look at the broad strategy that I'm trying to come up with a candidate for. Am I trying to buy this as a form of insurance, to protect as a hedge? Am I looking as a long-term buy and hold as part of maybe the strategic category? It's stable and secure, and maybe I get some, maybe I was able to buy it on sale and I can look forward to, the share price going up. But in the meantime, I'm going to get a a nice dividend payout, maybe. Maybe it represents a growth at a reasonable price, where there's sort of a risk and reward and a PE ratio is considered. Or maybe I don't care about the income at all, but I'm looking at this thing as a competitor for share price growth exclusively. And I think that there's a chance for it to appreciate dramatically if a bunch of buyers come in. So maybe I am now comparing it against the other growth opportunities like a Tesla or an Amazon or something. Or maybe it's just something that I'm playing on a short term and maybe I have some kind of theory. So I'm approaching it with my speculative money. So now I can take a look at the different buckets of the core and the swing and the day trading and say, which one of those categories am I trying to find a broad strategy for? And what's the purpose of this as an investment vehicle? Which one of those broad needs am I trying to satisfy? Well, I can also think about this thing now in terms of, performance expectations. Not just where it was or where it is, but what has it done? And I might look at long-term historical performance. Let's call that I'll just say maybe a 300-day look back. What's it done? Because maybe it's, as a asset class, it might have gone through some share price appreciation like that. Or maybe it was just, maybe it was something like this, where it's just been doing nothing but going up and up and up. Or maybe it was this thing was way high and now has come down and is just starting to hook. So all three of those are three different long-term look-back periods. Maybe I'm looking at weekly or monthly. Or maybe that's if I just use the 270, since that's the closest of the RLs. And then maybe I'm looking at current performance as that 30 period, the health of the trend now. And I can now distinguish between where is it in the long-term historical performance, and then what has it done lately? And then in that comparison, I may be able to find some relative advantage. Like maybe it's in a super pinch where the 270 and the RL10, are identical. Okay. Or maybe there's this historically wide gap between them. And now they're just on that basis, there may be some reason to think of it in terms of a speculation or a long-term buy and hold because of value or whatever it may be. So that's me just looking at different historical time frames against itself, or maybe even against some other peers. Now I might do some relative performance, and I might look at something like the blended monthly rebalancing or the ETF2 and say, or the RLFF, and say, all other things being equal, hey, here's where the REITs are stacking up in terms of strength and consistency and quality. Or, if I'm using the BMR, I'm looking at percent performances over different time frames. So I could now place that inside a scale of 1 to n that includes all of these other asset classes, and I can just evaluate it in terms of risk and reward and recent performance in that kind of a mode. I might now suddenly come back over here and say, let me consider, now that I've considered all of those different elements, what are the strengths of REITs as an asset class, as a thing to own? Why should I own this rather than that? Well, what are the strengths associated with REITs? What are the weaknesses associated with REITs? Taking all of these different lenses into account. That's sort of an internal to the REITs. I could also look at what are the opportunities and threats, right? So I could, under the opportunities, I could make a list of things that are favorable risk to reward. Here's the downside risks of being wrong. So I've itemized all these strengths and weaknesses. Then I can go to category 1 and figure out how I can put my strength onto an opportunity to seize it. So category 1 strategies are, how do I exploit an opportunity with the strength? The next thing I look at is category 2. How do the risks of the itemized threats get on my weaknesses and put me at exposure to disaster? How do I, and so category 2 strategies are, how do I protect my weaknesses from the threats that are out there? What can I do to minimize the potential damage? When I'm considering his threats, it may not be enough to just avoid it. I might have to use some of my strengths to defeat the enemy threats. So those are the category 3. Now, I don't really want to have to do that because I have to divert some of my assets from my strength exploiting opportunities, which is where I'm going to win, and divert it over into category 3 and use some of my strength to prevent the enemy from winning. So I don't win by doing that. I just prevent him from winning. But that's a diversion of my strength to stop his threats directly. Category 4 are some low risk things that I can do to reduce some of my weaknesses. Even if there's not an immediate threat to them, I can just do some good, low cost, low risk things that just make it harder for me to be attacked. I don't even have to wait for a threat to emerge. I can just do better. Like nutrition and exercise and sleep and building up my emotional resilience. I can just work on weaknesses and just get better. And eventually those things might even migrate to where they're things I can rely on. So when we do this SWOT, strength, weakness, opportunity, and threat analysis, and then combine them, we can find these 4 different categories of strategy. And then a 5th category is the trading plan, in which I consider the individual elements of strategy, 1, 2, 3, and 4, and then I decide which ones I'm going to do. I only have a certain amount of resources that I can put. How am I going to spend them on this blend of strategies from 1, 2, 3, and 4 becomes my actual action plan, and it should reflect my risk and reward, and it should reflect these different time frames and all these different lenses that I've looked on. But no matter what, this final decision that I'm going to make, how do I think about REITs and what am I going to do about it? What's my action plan? I'm always coming back to this central decision maker's mantra, and that is, what's the opportunity? What's the risk? And then what's the opportunity cost that if I take this trade, what are the other risk reward opportunities I'm giving up? That's the opportunity cost. A choice to trade the REITs in whatever time frame and in whatever fashion I'm doing it with, for whatever reason. A decision to trade the REITs in that way is a decision not to trade some of these other things. I've taken some of the assets off the table. So, in a nutshell, a practical way of doing this is that multi-time frame, MTF, MLA, multi-lens analysis. That becomes the procedural way to start itemizing all of those reward to risk opportunities from the different lenses. It takes into account the strategic, operational, and tactical time frames. It considers this as one candidate compared to all the other candidates. I can bring in all of these other elements of analysis for performance, and from that, I can consider ways I might decide to trade it, and then that becomes, the how do I think about the REITs? I think about it so that I can make a decision on whether or not to include it on my plan. So that's strategic planning right there. If it's on my list of things to prepare, I can now go from plan to prepare, then to execute, and then assess. So after I've thought my way through it in planning, now I can go prepare it in the usual way. And that's where the multi-time frame, multi-lens analysis helps you with the trade framing. And then we just pull out that little checklist of framing the trade. So For Dave, when you hear this, what do I think about REITs? And how do I think about REITs? There you are. So what do I do about it? Well, if you've gone through there and you think that that's worth preparing, then what I think about REITs and how to trade them is what I'm going to come up with after I do the trade frame. So if you want to really learn something, pull up one of those REIT symbols and do the 7 questions of the trade framing process, and then come up with a plan that's directional neutral and identifies the entry and exit points in both directions, and it answers all the questions of the trading process. So you now know how I'm going to answer any question that starts with, hey, Ken, what do you think about something? What do you think about energy, Cisco, Alcoa, the Aussie dollar, cyber currencies? It doesn't matter. That's exactly what I do on every opportunity that comes in. An acquaintance of mine, a business associate, asked me, did I want to invest some money in a cryptocurrency marketplace as an owner of an exchange in which cryptocurrencies would be offered for exchange. And they had some scheme to do that. And they had some interest. It was going to, cost $100,000 to buy in a share, to be a partner in that consortium to do that. The opening bid was $100,000. I went through this kind of process, and really it was always at the end of the day was coming down. I understood what the opportunities and risks were, and then I compared that to the opportunity cost of what could I do with $100,000 in the next 3 years as a pool of capital versus $100,000 tied up for 3 years in that opportunity versus $100,000 with cycling through, because that $100,000 is not just what it returns on the first trade or sets of trades, but if I'm cycling that $100,000 as inventory and I can start piling on, making money with that money, that's part of the opportunity cost, is the compounded return on the other opportunities that are out there. So I might now have to come over here and put not just bonds, but I have to now put, business as another slice of the pie in here. And maybe I have to put education in here as a general purpose slice of the pie. Hey, that's like for money, right? Well, no, it's also time. And now we can start thinking of ourselves as a business enterprise. And all of the activities that you are doing, the sum total of that is your brand. And you've got a business plan that accounts for all of that professional time, money, effort, attention, teamwork, resources, and all that stuff. And now you should start judging your activities in light of that business plan for success. And then inside that, there is a trading plan for success. And inside that trading plan, there are trading systems and strategies, and there's infrastructure and support and capital and all that stuff. So you look at these activities through this kind of so what operational lens. Never lose sight of the fact that you are trying to make the best decision on the decision that is the best to make, right? You want that to lead to action, which has consequences and has a risk-reward profile. And what's the best use of my time is to make the best decisions that I can afford as quickly as I can, but not too quick. And then get lots and lots of those decisions made. So that's one of the arguments in favor of tactical trading, that if you're good at decision making and finding the movers and having a directional neutral approach, and you can disassociate your identity with any one particular decision so that you can make lots of decisions. You're taking sort of a shotgun blast approach at the flock of geese flying overhead. You're willing to give up some of the perfect efficiency for a really good return on capital. A shotgun shooting at a flock of geese within range is a high percentage play. We're trying to stampede buffalo off a cliff. Instead of going and trying to arm wrestle a buffalo, if you can get the buffalo to run off a cliff, there's a certain efficiency in that. So, Dave, what do I think about REITs? Let me reframe that and say, how do I think about REITs? Let me reframe that and say, how do I think about opportunities? And how do I think about systems of gathering many, many opportunities? So I'm not trying to find the perfect one. I'm trying to find a broad selection of pretty good, really good things and handle them pretty good, pretty well, and then just use the law of large numbers and statistics to keep refining me into better areas that are suited for my skill set. That's what you're trying to do. Not trying to pattern match me step by step, but you're trying to discover your optimum payoff quadrant, inside this whole range of thinking. So in the hybrid trading course, there is a lesson in there that talks about design thinking for strategic planning, coming up with your own 5-year strategic plan for yourself that takes a lot of these things into account, not just the trading, but also the best use of your time and attention, and how to do those things. So maybe I'll go find that lesson and post that. That's the same thing that I do with my business consultants and the doctoral programs, and they're trying to help businesses, reinvent themselves and re-engineer themselves and come up with strategic plans that are robust. And a 5-year plan is a nice mark on the wall, because in 5 years, you're going to be able to see enough different kinds of swings and seasonal changes and lots of different fat tail events that you want to be able to survive that 5 years and have a plan to do so. So it's a long run. There's 1,000. That's why I say the next trade is just the first one of the next 1,000. Well, there's 220 trading days. No, 5 times 260 trading days a year. 5 years of that is 1,300 trading days. And if you just took one trade a day or one collection of trades per day, each day is only one day of the next 1,300 in this 5-year plan. So be quick, but don't hurry. Make haste slowly, the emperor advises us. Make haste slowly. So that's how I think about this stuff. So I wanted to say that before I forgot. Hopefully you found that useful. So just while we're here, as I'm working my way through some stuff. So I'm interested in instructional coaching. Yeah, Van, I don't know if I'd go that far. I thought it was pretty good. So I'm exploring the use of the Rocket Book here. That's that little, whatever that thing is called, that code. So when I take a snapshot of this with my phone, then Rocket Book sends it to a certain file in the cloud, and then turns it into a PDF, and then adds that as another page in a running bundle of PDFs, so that there's this growing automatic collection in the cloud of all these little sketches that I'm doing. And then you can specify a bunch of different categories, and it will send it to each little destination in the cloud. So like this one is good for here, but it's also going to be good for that storytelling workshop that I'm in with Van. It's going to be good for my military college. So I'm going to send this. When I beam this, I beamed it to like 5 different cloud destinations, and then all of the administration of adding them to that running list of things is pretty good. So I'm really enjoying the Rocketbook, and I just bought a bunch of multicolored pens so that, and this is all washable, erasable. So you only need to buy one Rocketbook. I've got a couple of different sizes. I got some 2-foot by 3-foot whiteboards that have the little beacons on the end, so it'll beam if I need to use a bigger diagram. So I'm just kind of exploring all this, as well as the digital pen. There's a certain satisfying feel of an actual pen in my hand in this notebook. So just playing with different means of getting this done. I'm probably going to use something like this when I do distance learning with all of the officers who are delaying their arrival to Fort Leavenworth, Kansas until January. I'll start teaching them at a distance in September. So it may be from all their different time zones, if I can convince them to use this, they can start beaming their little homework assignments and sketches into a common repository. Hey, so all you guys that are working in your little groups, you might be able to do a collection of the group sketches that you want to provide to each other, feeding it in from different doors into a common receptacle. So you can send it to OneNote or Dropbox or whatever the Apple's stuff is, and Google Docs and all that stuff. So it's the 8.5 by 11 sketch pad. It's a dry erase board. Is like $12. It's called the Think X2, available from rocketbooks.com. It was cheaper there than on Amazon, but so I got a couple of those coming just for the heck of it. If it really works, I may buy 20 and just take them to work and just force kids to use them. So I combined that technology experiment with this approach to instructional trading or instructional coaching. So the book is called Everyday Instructional Coaching, 7 Daily Drivers to Support Teacher Effectiveness. So this is really about faculty development, how to be a better teacher by having a coach who's going to coach you to be a better teacher. And since I coach myself and I coach others, and I sort of play that role at the military college, and where I'm teaching the doctoral students, I'm teaching teachers. And as I've told you before, that I think the best way for you to learn my stuff is to teach my stuff to other students. I'm really interested in being a better instructional coach so that I can teach you to be a better teacher, so that you can teach other people my stuff, so that you can teach yourself my stuff through practice and hands-on. So there's a real synergy now in all of the dimensions of my life, where learning to be a better coach of teachers or coach of coaches has a really high payoff. And so that's what I talked to my high school soccer players about tonight, because they're helping me with the U10, the kiddie soccer team. So they come to my youth practice and they act as my assistant instructor. So I teach them at our practices what they should be looking for when they teach these foot skills to the younger players. And I'm teaching them to be leaders and teachers and trainers and coaches. And that's going to be life skills far more important than how many times they can juggle a ball. It's actually teaching them pretty powerful techniques on how to be effective in public with others in a position of authority. That's pretty good skills for high school girls to learn at this time of their life, while they're trying to learn how to become, who they are and choose their identity. And then half my team are going to become nurses and half are going to become teachers. And so this turns out to be life skills. So the book is Everyday Instructional Coaching by Nathan D. Lang-Rad 2018, Southern Tree Press. So now if I end up using this as part of a literature review, I can do my academic writing. So in the Cornell Modified Note-Taking Sheet system, there's different regions. Over on the left-hand side is where I put the key concepts and key terms. Each one of these is going to be a trigger for a little mini speech that I've got to be able to give. That's where the storytelling comes in, Van. So the 7 daily drivers that he talks about are these: collaboration, transparency, inquiry, discourse, reverberation, sincerity, and influence. I know enough about what those words mean that I think I already have a pretty good idea where I think he's going to go. If he goes somewhere else, it's really going to be interesting. So I'm really interested to see what he comes up with, because I have some thoughts on how those things could make me a better coach and teacher already. I have some ideas. Further down in here in this, as I start going through the book, there may be some other important key phrases or things that are going to become triggers for 3 to 5 minute speeches. Then I've got some space to build that out. Down in this section, I've made placeholders because I noticed when I went through the index, he's got a chapter where he's going to build out each one of those 7 drivers and talk about, before, during, and after, and how to do it, and some methods and some principles, a little deeper dive. So what I'm going to do is one of these Cornell note-taking sheets for each chapter of his book. And it'll have this same kind of structure. And I'll have lots of room to make notes. But what I'm going to do when I go through each of those chapters, when I summarize that chapter and I talk about, the synthesis and critical thinking and the most important ideas and all that stuff from that chapter, and I put it over here in that chapter, I'm going to take some of those and then fill in this area so that when I get done, my book notes are going to look like this top level control sheet. And then the most important key phrases from each of those chapters, and then some way I can synthesize and apply this to the 4 different dimensions of my life: military teaching, doctoral teaching, trading, and soccer coaching. These are going to be the ways I can start bringing all those things together. I'm going to look for some explicit connections between the theories that he talks about here to some other teaching theories and practices, like maybe the Kolb learning cycle or experiential learning or whatever it may be, rubrics and online teaching or blended learning, whatever the different theoretical connections. I'll try to make a connection at the theoretical level. Down here in the action column are things that I'm going to note to myself, hey, just make sure you get that stuff done, Kenneth. So that's my initial setup for a Cornell note sheet study guide, a note-taking structure, so that when I read that book, it's going to be with this purposeful structure in mind. Well, that's what the guys who were putting together all of the Cornell note sheets for all the lessons from the different workshops and the nightly things they're working on. So they're building out a standard set of note sheets for each of those through different lenses. So we're working on putting together a really nice student study guide. You ought to think about doing this, and then you can compare your notes to what other people have seen, and that gives you the basis of really useful dialogue when you're in your small groups. This also becomes a lesson plan for how to teach the essential ideas and what you can do with it. So Nathan defines instructional coaching as daily, purposeful, intentional engagement with all learners to support teaching. And it emphasizes innovative and transformational big breakthrough ways, and that you should expect surprises, challenges, successes every day. There should be something amazing, a golden nugget every day. He says, frameworks and models and cycles and checklists are good. They're useful, but really teaching in these modern times and the world itself are so dynamic and so many variables, and local context matters so much, that you've got to learn how to sense and respond and trust your inner judgment and cultivate those skills and give precedence to what you know and what you see and what you learn, and not so much be bound by the various different frameworks, models, and cycles that other people who talk about coaching from their perspectives. You should prioritize the local context. And he says, the classroom becomes a learning studio once you start doing this. And that libraries transform into the learning commons, a resource collection shared by others. And that our physical brick and mortar buildings transform into just one part of the virtual learning environment in the learning ecosystem. That teaching is defined and teacher learning is defined as on-demand, self-directed, and personalized, so that teachers have to have agency and self-awareness so that they can figure out what they need to learn. So you could say, hey, trader learning is on-demand, self-directed, and personalized. That's what I hope to do with that learning management system, is to give you that rich resource base, the learning commons. And then in your small study groups, you actually have the ability to do peer instruction. Well, in this model, the teacher role is one that accesses and delivers and facilitates content in many different modes. That the student role and focus is to develop global problem-solving skills and become leaders, empowered, self-actualized problem solvers. So not repeaters of lists, not pattern matching with the instructor's beliefs, but developing your own onboard skill sets that allow you to solve problems that you encounter in the trading day. In this model, an instructional coach then has a focus of how to quickly determine how to support throughout all of these change experiences. So how to be more of a hybrid teacher and a hybrid trader, and let emergent practices quickly become tested and distributed and disseminated. You've seen us do that a number of times just in the last couple of weeks with the SSC, that whole family of trading. The hybrid workshop itself was a way to blend many different disciplines. The combining of these different lenses in multiple time frames into an integrated set. The ecosystem picture, the job book, the 37 strategies documents, all of those things become really important adaptive tools that will help us quickly determine how to support better. The weekend frequently asked questions becomes a way to get that done. So we can think of those 7 drivers now not as frameworks, models, and cycles, but we can think of those as robust guides or principles. You can ask yourself, not am I following a checklist, but as you watch yourself developing your action plan and working together, in your small groups, to what extent are we really living up to the possibilities of collaboration? How can we do that better? What are we doing that's working? How can we do that better? That's part of that whole continuous learning process. Plan, do, check, act. The daily after action review sustains, improves, and action steps. The 4-column learning journals. You could ask yourself that list of specific questions. How well are we maximizing the opportunities and follow through of collaboration? Are we being transparent? Are we approaching the markets in the sense of inquiry to discover answers to what we don't know? Are we engaged in critical thinking discourse, not just talking about ideas, but actually stress testing each other's ideas to bring out the best of the idea? We're not attacking each other personally when we ask critical thinking questions, or have you thought about this or that? We're trying to improve the idea that's on the table, and that's the nature of discourse. Reverberation, how well do these things resonate? And in what areas of my life can they resonate and replicate and extend? Are we acting from a sense of sincerity, and are we using our forces for influence to positively affect things? So look at the time fine. I didn't mean to go on this long, but it just seemed like it was important to discuss. So that's some insights into this collaborative learning process. I'm going to do some quick looks at some trades that matter. So today, in my view, was the applied find the movers. So these were the trades I was taking today and how I found those movers and how I did them. So this is Nikola Motors. I found him because he's a speculative, tactical only, no overnight risk, very volatile but very liquid. And this was just a gap up hybrid frog of 5-minute opening range and took out the opening. So I just said, you know what? I'm going to take the low of the day to the current entry and make that my risk box. And I'm just going to take one scoop. It moved up nicely, gave us the two little devil horns there, and I just decided to strike and take the PSAR exit. If I was going to sniper this thing, maybe my sniper, maybe my sniper would have been, my sniper might have been up in here, and my manager might have been down in there, and I just said, you know what, I'm just going to take it all right here at the skin of the dragon and just call it a day on one position. Nikola wasn't easy to borrow yesterday to go short, so I was only going to go long on this one. And this little quick, fast, and in a hurry gain ended up selling basically all the way back here to the open. Found support. So I feel like that is the definite. This was a good, strong summer. That would make this a nice winter. Supported spring crossing, and I just took it at the southern skin of the dragon as it was halfway back to the Bollinger Band mean, and that felt sufficient. So that was a supported spring crossing in the usual way. This was, let's see, Twitter, finding the mover. Why was Twitter potentially a mover? Because it had been underperforming remarkably, and then yesterday it crushed it. So today might have been a day that it could crush. So here was yesterday's little Z3 pinch, and then it immediately broke out. So I tried it, and I had a fractional loss. I wasn't quick enough. I tried getting short. It reversed. So I stopped and reversed. So I've got two little fractional losses. This one, I gave back the blue box, but it, made a little piece. It held support here right after I sold it. It gave me a Z2 supported spring crossing. I waited for it to get above the previous. Draw my little blue dot on this thing. Sorry. So I waited for it to take out the previous hump of the RL10, and using the PSAR dot as the ritual MMRB. Bought one, added a second position when it cleared the previous Z3 decisively. The RL10 never even came through the dragon. I just was playing the PSAR. I took a sniper exit here, then the manager exit there. Good trade. Waited. Supported spring crossing. The Wu Wei exit immediately reversed back into an SSC. Wu Wei exit immediately reversed back into a supported spring. So in each one of those, I'm giving up some little fraction, but I don't know that it's not going to get crushed. So I'll just do that all day. I'll give back that blue box if I get to keep the green box. This one was nice. Wu Wei exit. So Twitter was outperforming all day. This is a Wheaton Precious Metals. So I looked at this one. I was trading some of these other things earlier in the day, and I just noticed that Wheaton had a really nice gap up. I wasn't trading it, but I noticed it had a nice gap up. This dotted line that I'm on right now, that prints as the open. And so it had this little grind. When I checked in on it, it was making a peak excursion between the RL10 and the RL270. So that's represented by this this red box. I take it measurement from the RL10 to the RL270. I'm going to take this box, same size, and look how far down below the 270 it gets to. Or if I just stack it here, it could get that far. And that's how low it got to. I mean, almost to the penny. So when it, my little alerts triggered for, oops, sorry, trying to grab this. I got the alert that says harsh winter crosses the baby dragon alert. So I come and look at it. That's just a little ding goes off. Ding. Oh, what's that? Oh, this thing alerted. That's called finding the mover. I found the mover by, when it crossed the baby dragon in the winter. Alert. Frame the SSC. Wu Wei exit. Money. Next one up is the Qs. So this one was a supported winter crossing, and I took the PSAR exit for a fractional loss. I then tried I saw the low and the higher low, so I tried the supported spring crossing here, and that failed. That got me right into a collapsing dragon once, twice, and then the supported spring crossing, call that a sniper exit if you will. Give back the blue box, capture that on 2. And that pays for everything, by the way. So I don't worry about these up in here. I'm supposed to take those quick. This thing paid for everything. And then that stop and reverse. There's the Wu Wei exit, captures the green, gives back the blue, and tech was really strong. There's another in the afternoon. I didn't even have time to mark it up. It sold off sharply again and then rebounded strongly again. But even if you don't get that one, you got this one. This one is, hooray, the super pinch we're going to see later in the afternoon. So this is XLB. It had been underperforming, right? So this thing gapped up, had almost no follow through. Gave me a collapsing dragon here, a stop in the usual position, the Wu Wei exit. So right in here, the PSAR gets, below my entry. So I come here and I pick up the PSAR until it hits the Bollinger Band mean, and then just ride the Bollinger Band mean. Add a position, collapsing dragon, add a position, and then take the Wu Wei exit on a 4-bagger. So capturing 4 scoops, capturing the green, giving back the blue. If I were to do that again, I should have taken, this was a better exit there. At the end of the day, not that much different, but because I had 4 scoops on. So then it gets into a sideways quiet channel. And now here comes the RL270 and the RL90 joins it. And we have a super pinch, and then it immediately fails. So short, second short, and then this thing just paid off. All of the metals were just sucking pond water today. I want to shift out in time frame to a swing trade, much longer term. And I want to go back in time to way back in May. USO had sold off as harsh as it ever had. And so we noticed that the RL10 was down here at 14. And way up here, the RL270 was at 60. So that's an 80% sell-off, or I should say it's to go from 14 to 60 would be a 450% move. This turned out to be 20 ATRs. So when that happened, we stalked it and we bought it. And this one in June, by this time that trade had improved to the point where now it was trading at 30 roughly and got into the sideways quiet channel. We were prepared for either a failure or a continuation. But by now, the upside value of this thing was at 44 because the long-term fair value had decayed this much. In the time that it rose from the dead to here, the upside was much less because they had been conditioned by the fact that this sell-off made it much less valuable. So now this was probably 10 ATR because by this time the ATR was smaller. Over in here, this was 20, but there was some large range days in here. By the time it got to here, this was still 10 ATR. This little breakout that we framed last week was about 7 ATR. So our target now on that trade was 36. It had come down, 20% from here to there. But then we noticed that the Z3 lines had pinched. This wouldn't be a super pinch out here until the RL270 and the RL90 both joined everything. So this could end up being a super pinch out here at the end of July if this kind of just mucks around. But we noticed in here on this tactical time frame, when we zoom in, we saw a critical state in the speed run, and we saw that we'd gotten this sideways quiet channel developing all the way through here, right? And when we brought it down into this little piece, we said, well, in these last 3 or 4 days, we'd had a big sell-off and then 2 inside days, so we put a bracket on that, and that's what the orange dot was. And then the next day, it broke out here at that blue dot, so we bought the green dot. And our target was going to be up here at 34, 34.50. And this little breakout got reinforced here with a supported fall crossing. It took out the hump. Should have added a second position, didn't. Why? Because this was so bad that the PSAR only just recently flipped. I'm going to wait for this PSAR to get up into here. By that time, this will have cleared. So we're getting ready to test that like right now. So I didn't want to get a second position in. But I'm going to move my stop on this. I think up to like the 2-day low. And so now what I've locked in Oh, it crashed. Snag, it just crashed. So I'm locking in basically the the move to the red line, and then if it gets above like 2950, I'll look at adding a second position. So that whole thing's getting ready to crash. So that's what I wanted to show on those trades. Let's do, if we can, I'll try to do a quick speed run on the charts you guys were posting. So a lot of good work done today. We're already hour and 40 in, so this is going to go quick. But you guys are getting it. You know, the quality of your trades are really, really high. So let's see what we can do. Oh, I should just say, just because I got that email on there. So Bill Scheid is my drumming sensei, and I gave him 10 key words to be the song titles, and he's a master African drummer. So he and some musician friends are building out 5 to 10 minute songs on each one of those themes that we can use as part of our state management and meditation. So this one, track number 3, is the owl inspired track, and he's going to add some wood flute to it. And track 4 has some very interesting rhythms to it. And the imagery for those tracks, if I can find that, let's see where it was. He sent me a picture of the where was it? Well, anyway, it's a beautiful picture of a forest glen with a tree in it that was just amazing. Oh, here it is. Sorry. So that's his vision of the owl meditation tree, with the owl sitting in it overlooking a pond. And when you go through that ritual, you'll understand what that means. And that's what's in his mind. So he's building out a drum rhythm with wood flute accompaniment that will be supporting in spirit the owl meditation exercise. So I can't wait to try that. It's going to be awesome. There's a very strong connection between he and I on that one, because his son Finn and my dad Bill, the senior tortoise, had a very strong connection, like great grandfather, grandfather to grandson, and those two just hit it off so well that Bill and I both just kind of stood back in amazement. So that whole project kind of just strengthens that connection between those 4 generations. My dad, me, and I feel like Bill's my little younger brother. You probably want to be patronized like that, but so what? So, all right. So this is this looks like Pavel from Poland. He's working on his strike exits, and he's doing much better at collecting the green, giving back just a little bit, but collecting the green. So that is a rewarding adventure. Maybe this might have been Antonio. Maybe it is Pavel. No, that's Pavel. So again, he's working on the, look at these beautiful captures on trade 1, 2.8, 4 here. This one's basically a scratch and a fractional loss, and worn out. So trade 4 brings up the importance of being able to forgive yourself. He's beating himself up because he didn't get to scratch on that. And that expended all of the goodies that he earned, he felt, from trades 1 and 2. That's just how pernicious that negative self-talk can be. And the cost of that is missing this 5R here, which was the bigger move of the day. If he just trades that the way he normally would trade it, he would have entered up here like in the O of. He'd have entered it somewhere around in here and crushed it. So forgive yourself. It's all right. This might be, oh, I'm going to get this wrong. Start putting your names in the upper left-hand corner so I can attribute I almost remember the style. I think, not Glenn. So first trade, nice reversal. Oh no, I'm sorry. That was a shot and cover. Shot and cover. That's fine. Those are the same ones I took. Only I was on the cues on that one. So I had two called strikes, if you will. You made bank a little bit, and then big payoff here for 2.4. There was a re-entry opportunity. Good to notice it. You don't have to take it. Just notice it, especially when it holds support at the VWAP. That's really crucial. Then a beautiful short for 2.6. This one could have been a little quicker on a sniper. You will learn to snipe that a little faster, I think. And then nice payoffs in there. Well done. And that's probably 5 net, and that's missing this. There was probably another 2.5 in here, especially when you notice how tightly that PSAR is. Nice combinations right by the numbers. Two good scratches. Getting paid. Yeah, Griff. That's who. Yeah, I was trying to say. So this series 1.6. Here's a nice scratch. This is one that you'll probably want to get a piece in the future, and then that will help you take the stop and reverse, which would be a big payoff. You got the most of what was there. Well done. Z3 pinch breakdown in SPY. That's the one we got to get. That's probably, yeah, that's a super pinch. Everything is tightly clustered, and now the RL90 and the 270 are in there. Oh, change your RL30 to green, from green to blue, so that I don't get that confused. But this was the big payoff right here. That could have been 5. Very nice strike exit here. Well done. Especially, it came up and tested the long-term fair value, and it started to fail right where it failed before. Snatching that right in the moment is the essence of sniping. Well done. That's a good exit. Slow to get in. Maybe this might have been in here at the supported winter crossing. When it crosses the VWAP, leaves the river, or certainly by the time it breaks Z2, because now it breaks this CD. So that will give you, that would double the gains on that one. Nice work. This is Antonio. He's trying hard. He's made the MACDs smaller. Still not small enough, especially because you've got the RL10 color coded. And then turn the green and red to bars. Try that. Yeah, late to the party, missed the grind. Didn't want to short the SFC as it was one of the stronger symbols. Just take them and take the shot. Trust the rule, but verify the results. Tentatively trust. Very nicely done. Good exit. Need that second leg up. So let's get to the zero state and start executing this. Perfect SSC. Got everything that was available. There's an SFC in there too. Brazil. Yeah, it's hard on this grind. You'd have to be keyed in right around here. Try to hybrid frog off the from the open. I don't mind that. That's worth a shot. That's worth a shot. And then I would look at this when this whole thing collapses over here. So if you come over and find the low of the day, which is probably right about here, and then maybe there's a collapsing dragon in here somewhere, especially when summer goes to fall. There's some grinding available. There's 1.2. Final score for the day, 6.5. Nothing wrong with that. Nice work, guys. I like this notice that you got down in here that you're, that double bottom. This ended up paying off the bounce from here. Beautiful stop and reverse. That's how good that was. In that second position, when it's free and clear and falling, nothing wrong with that. Well done. All right, guys, I'll get this processed and posted. I'll probably pull out that opening set of lessons there as a separate. That's probably needs to be its own lesson. So well done, guys. Keep up the fire. Gratitude and forgiveness. Do the owl meditation. Form your groups. Get accountability and going. Neil and the crew that are working in on the Discord server, and the Euro gang, and then Worth has got a little Forex gang going. There's real power in the small group of learning, man. I'm telling you, that's the way lawyers do it. It's the way doctors do it. It's the way our military officers do it. It just works. Take good care, and we will be ready for these guys tomorrow, watching for tech, waiting for tech. That's what we want to see. Tech and materials, XLB, XLK, those two symbols, and then the derivatives of those. There you go. That's all I got for tonight.